Thank you all. Good evening. Thank you all for allowing us to come out this evening. Again, my name is Cliff Taylor. Represent the City of Harvey with the insurance programs, along with Mr. Marcos. To give you a little bit of the history, been representing the city now for 21 years with the health insurance. Recently took over the workers' comp and general liability in 2008. At that time, I partnered with Mr. Marcos and Hub International, which is a company that we work very closely with in the past and we've had much success. Mr. Marcos is the senior vice president of Hub International. Hub International is the 8th largest insurance brokerage company in the world, the number 2 in the U.S. The reason for partnering with them is because of the resources and the leverage that they bring. They're huge. They have a lot of leverage, they have a lot of resources, and I wanted those resources to come to the city of Harvey. I wanted those resources to be brought here so we could be comparable to other cities and get the professional treatment that the city of Harvey does, or Naperville or Schaumburg. So it was very important to have those resources available to the city and available to myself. Like I said, we've been able to do some great things since taking it over in 2008. One of the accomplishments we were able to do when we first took it over is we reduced the premium by $80,000. And we did that without reducing benefits. We actually enhanced some benefits. What we did at that time is we brought in risk management that was not happening at the time prior to that. And what the risk management consisted of was regular department head meetings with staff, invoke a state safety culture. It moved from having regular department head meetings as a whole to having specific meetings with departments because every department is different. With all municipalities, you have high-risk occupations, i.e. your police, your fire, and your public works. So not every department is treated equally. So in doing that, we started meeting individually with departments for their specific issues and needs. And we've been able to have a lot of success in doing that. What I'm going to do is talk about some of our accomplishments, and then I'll pass over to Mr. Marcos who can talk a little bit more about the proposal and where we are right now. Like I say, some of the things we're able to do is we put together a safety committee. We have regular department head meetings. Implementing an employee injury hotline. And that hotline, what it does is it allows our department heads and supervisors to be able to call in whenever an employee is injured on the job. What that's been able to do is been able to reduce our time from when an employee is injured to when we get notifications. And that helps a lot with our workers' compensation because it helps with claims mitigation and claims management. If you have a serious issue where there's a serious injury, the first thing we want to do is make sure that we have the resources available to first make sure that employee gets the care that he needs, but then we can put our claims management team together to make sure that they're getting exactly what they need, but yet at the same time we're protecting the city. What we also been able to do, I put together improved forms. So there's an entire packet that we have that department heads have. It has all the forms where an employee, if they're injured, witness statements, an investigation form, the required HIPAA forms, everything that's needed in order to properly file a claim. That the supervisor fills that out every time an employee is injured. They report it on the hotline, so I'm able to report it right away, and then we're able to get the information again and then follow up. And so that's allowed us to cut down our reporting time dramatically. Before taking it over, we were having reporting days somewhere around 30 days from when the employee got injured until it got to the proper people.
Since 2008, right?
Yes, exactly. So now we're averaging anywhere from 2 days to 4 days on average now for when an employee is hurt. So that's cut down our mod rate, which does help. And of course, we want to get all the help that we can in order to keep our premiums, contain as much as possible. We recently had an assessment done by AIG, which is one of our major carriers. And if I can grab that real quick. And major insurance carriers do this every now and then, probably once every 3 to 4 years if needed. And they come out and they do a full assessment. And they look at the city, they look at our policies, our procedures, they look at everything to determine, is there any recommendations? Is there anything that we need help on? Is there areas that we can improve? Now, of course, there's always room for improvement, no matter what you do. But this was done approximately about September 2014. And just to read one of the statements. The assessment that was done here at the City of Harbor was based on a review of your operations, policies, procedures, prior accident experience, and a survey of your facility. In general, the safety policies, employee training, incident investigation, and facility safety management reflect good standing, good risk, and safety management practices. No recommendations are being submitted at this time. When you usually get that from a company like AIG, that's pretty big, and it shows that, you know, the work is being done. It shows that we're trying to move forward in a progressive and a positive way. And, you know, to get that stamp of approval from a company like AIG, it's really, you know, it's a compliment to us and to Mr. Morgan and the team we put together that, you know, we're really trying to do the best we can for the city.
Is a copy of that in this packet?
That is not, but I can provide you copies if you want. Absolutely. Before I let Mr. Morcos go over, are there any questions or anything for me?
I just wanted to get some background, but then I can go after Mr. Marcus if you would done with respect to the city. I can follow back to Mr. Marcus.
Okay.
Thank you, Cliff. Being everyone, as Cliff said, my name is Steve Marcus with Hubbard International, and a pleasure to be here. Nice to see some familiar faces. Your Honor, thank you for including us and seeking our counsel for this part of your insurance. So just a little bit of a little more history. As Cliff said, you know, Hub is we are a large firm. We're headquartered here in Chicago. We are I think we're a little unique in that if you take our size away, we really represent what we call the middle market. That's our space. That's our wheelhouse. We are, I think, we have the largest broker that really has that as an appetite. And middle market, meaning municipalities just like City of Harvey, middle market businesses, and public sector clients. So we represent about 40 public entities here in the Chicagoland area, and we represent about the public municipalities, and we represent about the same in public education sector. So yeah, so my point is that we really, one of our tagline of our company is we bring you know, Fortune 500 resources to the middle market. That's really who we are. We are headquartered here in Chicago. Our firm was founded by a gentleman by the name of Mark Hughes, who's a Beverly native, and he's still chairman of our board. And my boss, our president, is also a Southside native. So we got a lot of roots here in the Chicago area, and are proud of that. So, and my relationship goes way back with Cliff for many years. We were friends long before we were business associates, which is what you know, facilitated you know, the introduction into business services and partnerships. And as he said, we really largely give, especially here for the City of Harvey, our role is to provide all of the resources that's needed to help he and I and the team that we put together, you know, be at the service of the city. So what we put together in this proposal, and I'm going to go over a couple high level, I'll be happy to get into the depths of it, but a couple high level discussions. If you kind of flip to, I'm going to start just with a little bit with the claims. As you can see in this presentation, we put together a 5-year history of claim data, and we separated it in two parts. One is non-workers' comp, so that's any type of liability, anything that's not related to workers' comp. And you can see by the graphs, we list what's incurred, what's been paid, and what's in outstanding reserve. Okay, and if you do the math, the blue bar, which is the paid bar, and the purple bar, which is the reserve, those two, if they are combined, they represent what the green is, which is a combination of the two. And the reserve is what the educated guess of the adjusters and the TPA that we've hired has, you know, estimated for future claims, or for open, claims, not future claims, for claims that have been open and incurred, but are being reserved as we seek settlement. So you can see the graph for the non-work comp claims. It's a 5-year history. And then below that are the work comp only claims. Then the next slide is this is really kind of the meat of the program. And it's my attempt, I don't know, maybe it's not that great of an attempt, but it's my attempt to try to illustrate how the different structures are set up. So what we've done is we have set up basically separate layers of insurance. I think somebody at the last meeting asked about the retentions or deductibles. We refer to them as retentions. This tries to illustrate what those retentions are. So you can see over to the far left, for auto physical damage. So a vehicle gets in a car accident, right? The physical damage deductible for that car, just like your personal car, is covered over to the far left at $10,000. So for every claim, the first $10,000, physical damage for an auto claim is covered by the city. The balance is picked up by the first layer of what we call reinsurance. That's just for physical damage. Same thing for property. We have a $10,000 property deductible with the exception of, I believe, earthquakes got a little higher retention, which I'll get to in a minute. Okay, and then the liability, general liability, and auto liability are included here. The E&O and EPLI, which is errors and omissions, public officials liability, employment practices liability, employee benefits liability, all have a $150,000 retention. So the first $150,000 is paid for by the city. This is what we call self-funded by the city. And then you've got the first layer of reinsurance, okay? And for workers' comp, so if we have a trip and fall, you're talking about the stairs, or somebody falls in the parking lot, or if we have some type of E&O claim against this body, the city's responsible for the first $150,000. Then the reinsurance kicks in, okay? Workers' comp, for every workers' comp, every compensable claim, the city has an $800,000 retention. Okay, so for the first $800,000, the city is responsible. After that, we have reinsurance that kicks in. And we've structured it in basically 3 layers to kind of keep it simple. First layer is through Lloyd's of London, or RIT is the syndicate that we use and the city uses. All right, and that is what's illustrated in kind of the orange there. Copies are a little lighter than mine. So this first layer here, this is the BRIT layer. Then above that, you've got a second layer that is AIG, which is the carrier that just wrote that Cliff read the letter for. And AIG gives us second layer of the majority of the layer, which is $10 million. And then we've got another layer on top of that. So effectively, we've got $20,500,000 worth of reinsurance after this retentions for those main lines of coverage. The auto physical damage is separate and the property is separate. Those have limits of whatever the insurable value of the buildings and the vehicles are, okay? Does that make sense?
Just a quick question.
Yes.
Just say the auto insurance is $10,000 for the first layer. We pay the $10,000, it goes to the first layer, and then it goes to the second layer. Does the city have to pay the $10,000 again to get to the second layer? So it just falls.
Right. And you're not going to get, unless you have a $2 million piece of equipment, which you might. Actually, I don't think you do because I got the equipment. You're not going to ever get the second layer on auto physical damage.
Right.
You might on an auto liability claim.
Okay. I was just using that as an example. So these deductibles, $150,000 is a one-time
Correct.
per claim. Okay.
For me, have we, in the 5 years you've been with us, have we had any outstanding claims like that succeed up to $800,000 for police, fire, or employees?
For the workers' comp, we have, yes.
How many?
I don't have that number off the top of my head. Not a lot.
It is not a lot.
Under, I think 2 or 3 on the workers' comp. So no, not many.
And was that basically from the police or fire?
Yes,
No, one of them was from Public Works.
maybe, yeah. I can't,
One of them was from Public Works.
I didn't bring, because this is an open forum, I don't have to.
No,
can't-
I'm just trying
I
to, you explained it well for me, I just want to ask that question.
Certain things they shouldn't be talking about.
They weren't all from police and fire. There was one.
Thank you. Any more questions? I'm gonna get a little.
No, I'm good.
Okay, so, the next slide, these next 2 slides actually represent the markets that we approach. And as I said, I mean, one of our main roles is, aside from supporting on the risk management and loss control side, it's to try to market and get better rates. So these are the markets that we approach this year alone, these next 2 slides. And you can see the responses from all of these markets. Now, there are different reasons. Some didn't like the exposure, some didn't feel like they could be competitive because we give them some targets, right? But we effectively put together a profile, risk profile, and give them all the claim data and give them some target premiums. And if they're interested, then they provide us a quote. If they're not, they decline.
One more quick question. You deal with a lot of other municipalities, correct?
Correct.
This is not an unusual step.
No,
It's a standard for
whatever
people to deny or decide not to write. That's a standard protocol for
Correct.
insurance companies.
correct. And actually, just to that point, if you look at the first page, that second page are just property markets. The first page are the liability and the law enforcement and workout, those 3 main lines. Those are pretty limited it's a pretty limited marketing space. There aren't that many carriers that you can go to. Property, it opens up a little more, but as you can see by the next page, but it's a pretty small list of companies that are actually willing to underwrite municipalities.
So it's very common to have a couple pages of declined.
It is.
Okay, I just wanted to confirm that.
Then the next slides get into a little, deeper dive, and I'm happy to go through each one of those, and you can see the breakdown of, for example, the next slide is the property slide. Gives you the total insurable value of the building limits, right? It gives you a breakdown per line of coverage, and then the premium. Now that one, you'll notice we had a big jump. That was largely due to some claim activity this last year. And then if you go to...
Can we back up?
Pardon?
Can we just back up?
Sure.
Is it some claim activity?
We had one pretty large claim on the property this year.
Somebody getting hurt or
Oh, it was a property.
Building collapse.
Building damage.
collapse?
Right.
And that fell under the limit of, under the structure,
10,000.
okay.
Correct.
So it went up close to $40,000.
Right.
Was that building even worth 40 grand
I believe the claim was close to 200.
for the cleanup and everything else?
That's what they paid out. Yeah.
Yeah, what they paid out.
In excess of
About 160, we only paid about 40 cream. About 4 times. And just to remind you, on the property, there's a 10,000, that was reduced when we took it over. Before we had it, the deductible was 25,000, right?
Yeah, in 2008. Right, in 2008.
And
Okay.
that's
Yeah, it's just that it's one claim Well, I guess that would apply to anything. One claim and your insurance premium goes up 40 grand.
That's it.
Yeah.
The next slide is the crime, and we can spend a little time on that if you'd like, but I think the next slide is really kind of represents, I think it gives you a pretty good visual of the first layer and how it's structured. So you can see to the left, so this is the one titled professional package. This is the BRIC, so this is the Lloyd's BRIC syndicate. This lists the current structure to the left, and then the renewal structure to the right. And you can see that the limits, the retentions went up and the limits came down here.
SIR, what does that stand for again?
That's a fancy term for self-insured retention.
Repeat what you just said. The work went up and the work went down.
So if you look at, let's just, for example, look at general liability. On the left, the limit is 400,000 for the current term. And the retention, just to the right of that, is 100,000. Right? So the combined is $500,000. The first 100,000 goes to the city. The next 400,000 goes to this first layer. Then we've got the others. If you go to the right, you can see what they've done is they've lowered the limit to 350, but they've raised the retention by 150.
And that's the same thing with employment liability practices.
Correct.
So it
Now-
went up.
The retention went up, the deductibles went up, yes.
Right, but is this the first time that the retention has went up since we had this policy?
Yes. This is the first time we need to raise the retention.
So we have the general liability went up 50,000. The employment practices went up 50,000. And then workers' compensation went up $100,000.
Correct.
And that's without having any claims increase because we were reduced, right?
Claims overall, but then you talk about severity of claims.
Right. Could these risks, are they a part of the overall risk with respect to the things that's happening, from the national perspective, or?
That's a very good question, Your Honor. Yes, I actually had, we fought tooth and nail with the, we fought tooth and nail on that workers' comp retention. Here we go. And this was the response, and this is a national trend. First of all, this is a response from the underwriter. Work on industry as a whole see poor loss experience of police and firefighters as a class. It wasn't specific to Harvey, and we've seen this on other municipalities. So, police officers are now the number one source for $1 million plus claims, and firefighters close behind.
So it's almost like basically this risk as a whole.
Correct. We've seen this across the board. Every public entity, and we marketed the work comp to. There's only three or four solid markets, and we've never been able to get a better deal than what we've got. And we've seen almost all of our municipalities have seen an increase in those retentions on workers' comp. And it's largely because, as a whole, the loss costs have gone up so high. And
That's several of my mayoral colleagues are expressing the same interest. That's why we have meeting with those some concerns, and that's why I was looking at the national trend. And so it's just not isolated to Harvey.
not at all. No, that's absolutely correct. And I would venture to guess that most of your mayoral colleagues in Illinois are using the same reinsurer. They're really the only game in town. They're the most competitive. And they've been, for the past 3 or 4 years, trying to bump up retentions because their loss costs have gotten out of control. So
And if I could add, along, like I said, a number of mayors that have been voicing concerns in the South Suburban region, and that's a fight that's going on in Springfield now because they're trying to look at workers' comp reform because Illinois is the 7th highest rate in the United States. So they're still trying to work on workers' comp reform. I know if you guys have been reading, there are companies that are literally leaving Illinois and going to Indiana and saving millions of dollars, not just on workers' comp premium, just because of the different rates. So it is a national issue, but it's also a state issue. And, I know they're trying to work on it.
When we refer to workers' comp, we talk about like when officers get hurt,
Yes.
duty, and they got to take off. Firemen get hurt, that could be, I can understand throughout the whole United States we have that.
I can't, because I want to know out of the, if it's a national trend, okay, but do those national trends pay $800,000 retention?
Many of them do. Yeah.
Which ones do? Because you did comparisons, so which ones are paying $800,000?
Which municipalities throughout the state?
Yeah.
I can only tell you from our client base, many of them. I could give you a percentage. I couldn't give you I'm not sure that I'd be able to give you names, but I'd be willing to give you some percentages. I don't have it off the top of my head, but I'd be happy to get that for you.
Okay, well, this is kind of stuff that I need to know now because we're in the community. I'm just trying to figure it out because if these retentions are an 800,000 retention is pretty high, and so from our last meeting when we first came before us, it was said a lot of these things are happening for a variety of reasons that were internal within the city of Hartford. Now it's the retention is high because it's a national trend. So I'm trying to find out what's going on, and I want to know who is paying $800,000 plus for a retention.
I don't know that I agree with that statement. I don't think that we said it.
You don't have to agree. I'm saying.
Okay, but I can tell you that this is a national trend. Work comp retentions are going up nationally. I'm happy to get you those percentages. As far as our book here locally. Now, we do have other issues that have caused us problems that are specific to Harvey, but not this retention.
All right. Okay.
Is that fair?
Now, in the E&O employment, it went up to 150 and it says claims made. What does that mean?
Yeah, so it's claims made policy, you'll notice right below there, I think there's a retro date. So this policy picks up any claims going back to 1997. So it's got what they call full prior acts. And if we were, so if we had a claim that came, that popped up from 2000, that, all of a sudden, I don't know, there's probably statute of limitations on many of those, but
Yeah.
the policy is a claims made policy. So it's when the claim occurred, not when the occurrence occurred, that this policy responds to.
Okay. And why would that go up 50,000? Because that's more or less the elected officials, correct?
It's part of that, right? It's more than just that, correct? It's employment practices liability. So if we were to wrongfully terminate, if we were to be, it's a variety of coverages.
So how often has that transpired where we've been in need of the errors and emissions insurance?
Well, I gave those, if you look at those claim graphs, the graphs in the front, again, I don't have specific claim information, but I believe our loss ratio is right about 50% on that. On the overall breakdown, it's not specific to that one line, but I have that here. So the break profit loss, it's about, I would say, roughly 45% loss ratio in the last 5 years.
But going back to the graphs, you said that somewhere on the graph, which graph are we talking about?
The non-workers' comp grant,
Okay, got that. The property damage, bodily injury, and expense. So where would that fit in?
say it again, I'm sorry.
You said the non-workers' compensation grant?
Correct.
Okay, it says property damage, bodily injury, and expense.
Correct.
So where does that
It's a combination of
fit
two.
into?
Let me pull that. So it's the blue and the purple. Depending on the type of claim. Because remember, this is a multi-lines policy. So but the blue is paid, the purple is reserved.
Yeah, I get that. When you're talking about errors and omissions, and I'm asking about the times that we've had to use that, and how does that fit within this non-workers' compensation?
I didn't break out the specific E&O on that grant. That's a combination of the entire brick, of all the work comp lines. I'd be happy to get that for you. I'd like to see that.
Okay.
And then on here, it has the premium, and it says excluding taxes and fees. What kind of fees?
There's, those fees are state fees. Those are fire marshal fees. Those are, excess and surplus line taxes. Those are all state taxes and fees.
Okay.
And I believe that, well, we have it on premium summary report on that, but it's about, 3.5%, roughly 3.5%. Those are all state fees.
State fees.
Any more questions on this slide?
Right now, not for me.
The next two slides are just the next two layers. So this brick policy, as I said before, is the first layer. Then you've got, the next one's the safety national, my apologies. This is a work comp policy. This is based on estimated payrolls. That's what the exposure base is calculated off of. And you can see payrolls went up slightly. This retention did go up to $1,250,000. So the way this is structured is the brick policy has a buffer, what I call a buffer. So $800,000 to $1,250,000 is picked up by that first layer for workers' comp. Okay, and then this policy comes in as a secondary.
And we pay that, correct?
Pardon?
We pay that, correct?
You pay the premium?
I'm asking, you said the 800,000 to the 1.25, and you were talking about your buffer.
Right, that's the buffer.
Okay,
So you pay up to the 800,000.
we pay up to the 800,000.
Correct.
And then the 1.25 was the difference between the 40 to 50,000, who pays that?
That's the brick buffer.
Okay,
That's the
so
brick.
who pays it?
Brick.
Okay.
Right.
Now, I was looking at, insurance overall, and just taking in with respect to my own insurance, my car insurance, it seemed like it's almost unavoidable with respect to the way it kind of increased at times. But I don't know, could that be a reflection of the market? Because I haven't heard you guys talk about the fluctuation in the market. And can that have any, does that attribute to increases in our insurance?
Yeah. So, yes, the market, as I said, I didn't make it very clear earlier, but yeah, the market in general, loss costs in general, have gone up, which has driven. We've seen it on the healthcare side, right? So if you think about workers' comp, employee gets injured on the job, their costs for treatments are higher, which drive up claim costs and loss costs, and same thing with auto repairs. Vehicles are more expensive. There's population growth in this area, so it becomes much more hazardous. So yeah, I mean, those are all factors that contribute to the increase in premiums.
So why did that say SIR on the renewal and the current? Is it something that Brick pays?
So if you go back to that brick, just to try, I know this gets a little complicated.
No, it's not complicated, just take it where you need it to go.
Sure. So if you go back to, so you have, the first layer is the brick layer. Okay, so brick, you're talking about the workers' comp. Right now, we have a claim, workers' comp claim, the first 800,000 is paid for by the city. Brick pays from 800,000 up to 1,250,000. The difference is 450,000, that's the limit there. That make sense?
Yep.
Okay. So the first 800,000 comes out of the city. The next 450 comes from brick. And then the balance comes from Safety National. That's how you get to the 1,150,000. You take 800,000 plus 450, and that's the 1,150,000.
So, I don't have the previous, policy renewal before me. But if we look at the current, in the current, where it says 1 million, then what was the brick policy covering in that particular time?
Right, it's to the left there on the brick spreadsheet.
Mhm.
It was a $700,000 protection. So the city,
I'm looking at the Safety National right now, sorry.
okay. But to answer your question, it was a $1 million.
So they did 300,000.
Correct.
Got it. Okay.
Okay. Okay, now if you get to the next slide, this is this first layer of what I call the umbrella or excess policy. This is Lexington or AIG. This is a $10 million umbrella. It's everything follow form of the brick policy, and law enforcement liability is covered here as the first dollar. That's why we listed it. We've got $500,000 on the other lines, but brick doesn't pick up the law enforcement. That's picked up on this policy, the $500,000. Everything under the brick, except for the workers' comp, is picked up after the first $500,000, including law enforcement. Up to $10 million, and then the next slide, we've got the next $10 million. That's where you get the $20 million plus the retentions.
And what does TBD mean?
We've got that now. I think we've given,
Yeah.
right. That went, I believe we gave you the,
It was 95, it was 95.5.
They put in premium summary, we just felt we didn't put it in the TBA because we were still negotiating on it.
right.
Put it in.
Yeah, we got this the day that Monday that we were here. So it should be out, yeah. It's here. Right.
But we felt we put that in right there and then
We just have to put it in that slide, yeah. And that's pretty much it.
And I know it looks like there's a lot of different layers and who covers what and where, and that's part of what we do when we try to customize a plan for the city. If we can save money by increasing the SIR over here, but we can bring a buffer in here, they may not charge us much. Things are unavoidable. For example, we'll take 13, 14 policy. We had somewhat of an uptick in claims. Like that was that winter where we had 80 inches of snow. So we had an increase in back strains, increase in slip and fall, a little bit of increase but that was all because of inclement weather. Same thing with last year. We had 40 inches of snow. And all of those things do matter. And the reason I say that is because when you look at this current policy year, 15, 16, 19 claims. So these things matter, in terms of, regardless of the ongoing training, but certain things is just out of our control.
I'm pretty confident in the police department, the fire department, because they know how.
And they have their own section. Ongoing training.
I was just wondering about our street department and hard hat, gloves.
And every spring we go through a training session, especially sometimes when we have summer workers and things of that nature. I go over there, we do this efficient. We have an ongoing training session for all seasonal employees, anybody that comes in. Training.
So, we have this twice a year.
That one, yeah, with seasonal work, of course, that's once a year, but what I do get is ongoing. It's ongoing, constantly. If I see an uptick or a change in something, then I'll sit down with that specific department, talk about what the uptick may be and what we can do to change that.
back to the 800,000. So is it rain or is it light? So we got the, you said 800,000, you said that happens progressively over a period of time. Is that that's what you said?
That's the king, yes, when you look at overall claims, yes.
Okay, so if, let's just say, for instance, our retention is 800,000. So a person comes in, and they have, some issues, and they have a workers' comp issue. And so, right now, it's $100,000 that you're paying out. Say, for instance, a year from now, it's another $200,000 that you're paying out. And eventually, we work that up over the course of 5 years, because a lot of people don't just heal, within a month. So we can get to $799,000. And for all intents and purposes, we will have paid that and the insurance will never kick in. But we will have paid, how much did we pay in premiums last year?
For workers' comp, it's roughly what, about 120,000?
120,000.
And what was our overall total premium cost?
All the lines, or just
Yes.
workers' comp?
Total.
Total about 1.8 million last year, or this current year, I'm sorry, this current policy.
But the workers' comp is the only one with the 100,000 branch.
Okay, I understand that. What was the amount again?
1,722,000, I believe.
1.7 million?
Yes.
And our total premiums are moving up to what amount? Look like 2 something?
Roughly about 2.
Right about 2 million. Yes.
So we could continually, let's go back to, let's go down the line. Okay, so we got workers' comp, property, and those same things can continually happen over and over again. How many times do we exceed our retention? Say, for instance, last year, over a period of 5 years. How many times do we exceed our retention?
So, this is the, I'll give you a couple numbers to answer that. This is, I'll start with the AIG, which is the first layer of excess. Over a 5-year period, the city, including 2015,
Are you reading from something I can see, or are you reading from something else you can see?
I'm reading from my claim.
Okay, okay.
I'll have to be able to send this to you. So from February 2010 through February 2015, so over a 6-year period, 6 full years, premium that the city paid on that particular line of coverage was $3,448,000. The paid. No, can I give this information as public? I'm not giving specific claim information.
Otherwise, we can make a motion to go into executive session.
I mean,
Well, we're not mentioning anybody's specific names or anything like that.
Yeah, okay. So incurred and paid and reserved, 7.2, almost 7.3 million, 7,291,000. So almost double in claims now. That's reserved, it includes reserves, that's expected claims, but it also includes paid. So it's, double what was paid previously.
Okay. Well, what I'm trying to find out, maybe I'm not understanding now, is very simply put, how many times did we exceed our retentions? If the retention is $800,000 out of the claims that have been made, how many times did we exceed our retention?
If you're talking about this specifically the work comp, I don't have that number, but it's a handful.
All of them.
Yes.
Several.
It's not 20, but it's a handful, probably 3, 4, 5.
We're going down and looking at all of the lines. How many times did we exceed the retentions on those lines.
I don't have the number of claims, I just have the dollars. That's what I was just reciting. I don't have the number, but I can tell you the dollars. You know, like I said, you've got, so if you think, on the AG piece alone, claims have been about 3.5 million over the 6-year period. Claims are 7.3 million. So, you know, that's a losing proposition for AIG. But I think, you know, to the mayor's point earlier, I think this is something that if you kind of step back and put it in perspective, I mean, there's a lot of things going on. You've got, we talked about at that last committee meeting, you know, the scrutiny that the public sector is under. Look at Flint, Michigan with the water crisis. Look at social media, how that has put police and fire, especially police, you know, under a microscope. And so underwriters see that, carriers see that, and that in general has created an escalating risk in their eyes, which you know, converts to higher premiums in general. And workers' comp, although we've only had a handful, you're right, we have had some. I read that email from the carrier citing that, you know, law enforcement, they're the highest source of work comp claims exceeding $1 million. You know, and fire is not far behind. So they look at the risk, and they look at one claim can flow through that $100,000 of premium in a heartbeat. Does that help a little bit?
If I can add, with police and fire, they also have special state statutes that work in their favor that regular employees don't. For example, they have PETA benefits, which are state statute benefits, where you have to pay them 100% of their salary for the first year that they're off. No other employee gets that. Every other employee is 66 federals. So police and fire automatically, they have something, they're going to be higher in general, just because of certain state laws and things that work in their favor.
So what were those other things you were saying that contributed to our increase in premiums and increases in the retention?
So what I mean, one of the things was concern was, was that that was one of the issues. And then first is the overall we talked about, then they break it down to specifics. And that was one of the more concerning for them.
But the levy was the reason why they declined us, right?
No reason for decline, and it's also a concern for the current year.
Who declined this because of the levy?
Yeah, because when I asked him, he said this is pretty standard for municipalities. For
Oh, no, as an overall, it's not the only reason, but as an overall.
and it weren't mentioning,
Excuse me?
it weren't to mention the levy was the cost.
No, not the only cause. That was just one of the concerns they had.
But let's stay on the levy for a minute. So the insurance bureau, or the underwriter, basically sent you a letter back saying that they will not insure us because of the levy.
Correct.
Who did that?
Including our company,
Well, our company is looking for a renewal with higher premiums and higher retention. So, but I'm talking about who did not.
And if we can get a copy of
I'd be
that,
happy to get you a list.
You can lie on this.
Yeah.
There's gonna be a lot of them.
yeah, I definitely would like to see that as myself.
So just to give you a sense, one of the things that the underwriters are looking at is,
Because I can go and leave my family. Right. Y'all not gonna do nothing.
No, we're just
Right. Just
going
got
over
the
this.
trial right now?
Yeah.
Yeah, that's what you want to call it. See you later.
Hey, y'all.
Let the record reflect all the prices here. But I think it needs to be clear that the levy issue, it kind of speaks to, the insurable risk that's associated with something like that.
it does, I mean, it's caused us a lot of trouble.
Excuse me, sir.
Yes,
Mr. See you later. It was real funny you wanted to pay some bills last week.
What are you talking about? I see you lady gave me some look, bro.
When you said, oh, we gonna pay some bills tonight.
I don't get you. But okay. Whatever. Continue.
Yeah, I mean, it's caused a lot of problems because the way the underwriter, I mean, there's all kinds of claims that can come from that.
And I think you just need to speak to, you have a catastrophe, or let's say, for example, something like 11. Those things are called like insurable, kind of create exposure or insurable risk. So hopefully, moving forward, things like that do create, concern in the industry. I'm just speaking from, insurance industry. I would think education test scores create major concerns. Lack of graduation, major concerns. So I mean, you can speak to that.
I'm happy to speak to it if I'm allowed to speak freely about it. I'd be happy to. So, a couple of things. First of all, if you look at the funding, right? I mean, insurance companies look at financial. You asked me at the beginning of the meeting about earthquake, personal insurance, right? What do they use when they underwrite you for your homeowner's insurance? They look at credit scores. That's a big part of their underwriting. The ability or inability for somebody to pay, not only, forget about the premiums for a minute, right? Because they know it's canceled if you don't pay the premium. But if we end up in a situation, the city ends up in a situation where there's massive layoffs, what's that going to do to that EPLI exposure or coverage? It's going to drive claims through the roof. Property maintenance of our buildings, okay? At the last meeting, if I can speak frankly, at the last meeting I was here, this body did not pass accept a $200,000 grant to improve the potholes, right? That causes, somebody driving a vehicle, they hit a pothole, they run off, and they injure somebody, all of a sudden the city's gonna be liable, right?
Okay. Well, wait,
One more thing, if I may. Same thing with your buildings. They look at the property rate went up because they look at the condition of some of the buildings and the maintenance of some of the buildings and say, from their perspective, it's a big explosion. So
okay, so with that being said, and I can see your point, but when we go with the auditors, and what the auditors are writing, and what they're talking about the grants paperwork, whatever. But it's mentioned in here. It's also mentioned in this. I'm glad it kind of ties in. It says work closely with the TPA and corporate counselor to review outstanding claims. It's mentioned in the audit that in here, and that's where I don't understand this whole insurance. I don't understand. It said this is led by a variety of significant transactions being approved outside the board meeting by the city council. Additionally, we note that litigation related to invoices are being submitted to the city's liability self-insured claims administrator. That would be you, right?
No.
That would be you?
No.
Who would that be?
That's a third-party administrator that the city engaged in.
Who is that?
Who is that then?
It's IPMG, excuse me, my mind went blank. They're a third-party claims administrator.
So the company that said we're doing wonderful, right? No recommendation.
No, that's the insurance company.
Okay,
IPMG is the TPA, they're the third-party administrator, they're the ones that administers the claims. When we send a claim in, they're the ones that does the administer the claims management, and make sure that medical bills are getting paid, TTP payments, all those things.
So when we look at the first layer of victim's liability, and it says law enforcement liability follow form. We have the current and the renewal. So looks the coverage and everything remains the same, but the premium is about $185,000 different.
Correct.
So what decreases that premium? And I'm sure that doesn't have anything to do with levy. or the fact that we didn't, do a,
Well, the city's self-insured to a large degree, so if you're not in a position to collect revenue, you're not in a position to, claims, frivolous claims, maybe not frivolous claims, can escalate. So yeah, it's a problem in a lot of ways.
So you said at the last meeting, you said that you have been doing this for quite some time, at least since November. Okay? And at least that's what I recall. And so you were going out and you were searching through all these insurance companies, and some insurance companies were denying. But the levy wasn't due till December 28th. So you were getting these denials and all the rest of this stuff, even though the levy wasn't even due at that particular point in time? Based on the levy?
Our proposal, what I believe I said, was that we got proposals, the final proposals the week before that meeting, I believe, is when we got the proposals.
So you got all your denials, all your everything in 1 week, the week before. Now, all the information that you needed, everything you needed to put together, basically you put together in a week.
We got our first release on came to us on January 20th. It's dated January 19th. That was our first proposal that we received, yes. And then we had to give, because it starts with the first layer, and we have to go to the excess markets. So, yeah.
And again, I don't have, I have limited knowledge with respect to the way that insurance companies do that, but I would just surmise that these particular insurance brokers or companies that monitor, throughout the state and the city, probably more than likely look at the news,
Absolutely.
read the newspaper,
Absolutely.
and so they, that kind of gives them a
They read the, yeah, absolutely, absolutely.
I would agree with that. I just said, I disagree with the levy. Because if I was to go back 5 years and look at the chart, we've always, Harvard's always had a challenge. We've been challenging for some 25 years. I still got some holes that's got some metal in it. It's there. And potholes, we just patch them with cold patches. And, I don't like to say that just because this 1/10% of the money that was denied or voted down was actually absolved 78% of our potholes and our street conditions are that, with 100 years old streets. Still, they got challenges. I got Alice, it's never been, it's a swimming pool. But I don't want to say that. I'm just asking, I was just listening because I'm trying to understand. I'm glad you gave me this report. But I just don't want to, I understand what insurance companies are supposed to do. They're always going to look at a community that is challenged. And we do have some challenges. And they will always, because in my house, my car, they say, Harvey, it's up. Just because I'm older, my premium is a little fair, but because my kids, it's hard. So I understand that. Just that I just don't totally agree with that, but I understand the publicity, and I don't take that I have anything to do with it. I just have to be a steward and try to get the best.
So when do you start working on these proposals?
I would say November we started working on it.
So about 4 months before the actual date.
Do you guys have a breakdown of the the claims like per year?
Yeah, there's a graph, couple graphs in there that give the incurred and paid.
But that's over a 5-year period, right? That's not per year, that's over 5 years, correct?
But it's each year, I believe, it's broken out by year.
No, I'm saying as far as like how many claims were made like per year.
I can get you that, sure. Yeah, we'll get you that.
And I'd just like to say that in 2006 and 2007, Harvey has a very serious problem with respect to liability of workers' comp. You know, speaking of claims, there was inconsistent claims data. There was constantly 11th hour renewal process. But again, now that Mr. Taylor, Mr. Marcos are on board, utilizing their talent and experience, you know, we've seen some significant changes. And I certainly just want to say that when you look at the various things they implemented, I was just jotting down a couple points. You know, number one, with respect to the safety meetings, training of employees, implementation of protocol procedures, investigation of claims. I think that's very major. And during my tenure as mayor, I've seen, you know, again, since 2006 and 2007, the actual investigation of this claim, which is very imperative that you have someone do that. And then timely renewals and transparency. I think that is just key. And so I certainly want to thank both of you gentlemen for that.
Thank you. Yeah, this is always the hard part to see. This is the most visible. But we work all year. We've tried to work very hard for the city in all those respects, and loss control services and recommendations ever since we've been involved. So
I got one question.
yes.
Where is this like, we have, the homes, the abandoned homes that we have?
Mhm.
How do you assure the company, the insurance company that we are, and that's your risk management, how do we ensure that our properties that we do own are not gonna bring us up in liabilities? We have any, that's one question. How do we do that?
Well, first of all, whenever you have a vacant, you're talking about the homes that we.
Have we taken, a lot of our big homes,
City homes or?
city homes, properties?
As long as they're properly closed off, they're not they call them attractive nuisance. They're usually not too much of an issue. I think we've done a nice job of reporting. They rely on us. We're their eyes and ears. We're the underwriter's eyes and ears. Cliff and I and people on this management team are their eyes and ears. And so they rely on what we tell them these actions.
So you don't know, you tell them, but you don't really know exactly how many houses we do have and you've seen.
Well, not all. Okay, sorry. No, I just want to add that I think Alderman asking in regards to the city-owned properties. One of the things that Superintendent Fisher and Superintendent Cedric and Ms. Rufus they do based on the direction of the giver is that when we do an assessment of the various city-owned properties in the city, we make sure that they're boarded up. Right. So that it takes some of the liability away from the city. Correct. Make sure we check, outside the sidewalks, make sure that, anything that someone can be exposed to with respect to liability, we try to make sure we monitor those particular homes. Right. So again, every day there's assessment teams that go out to the community to monitor, various wards, monitor those city-owned properties. Right?
So does that affect our liability?
I think if
The amount of abandoned homes that we have?
if they're not boarded up,
Yeah.
or exposed,
No, not really.
so we don't have to board them up, right?
Pardon?
We don't have to board them up. That's what you're saying.
No, I'm saying, if they're boarded up and they're being looked after, yeah, then it doesn't have, it has a small impact. It has a very negligible impact on exposure.
We're talking about city property, not abandoned homes.
I think, right.
I thought, I think about
City home.
No, we're talking about city-owned property that is vacant.
Oh,
Alderman, they do an assessment of all the properties we have, and they have to submit that to the insurance.
right.
So they go around and find out every property that we own, so that is yearly submitted.
Right.
And they make sure, we're supposed to ensure that they're always secure. And then our buildings that we use are supposed to be, of course, heated.
Right.
But like there's a
That's
building
subject I-
that was in a fire and it's abandoned and it's just there and it's not torn down. We're not
No, not if it's just a building, not,
It's a building.
yes, no.
Okay.
Wasn't that in the audit? I think, so that's mentioned in the audit by chance, that, because the thing about it is, we don't have a assessment of how many homes we actually have. You say that they go out every year, but the auditors seem to, at least from what I recall, had some difficulty trying to figure out what properties that we own, that the city owns.
Well, I think part of what you're seeing in some of those audits was the fact that it went back so far. So the auditors were in a position where they were having to compile many years of data, many years later.
But this is just 13, not.
So, I mean, but I think 13 piggybacked off of 8 and 9 and 10. So I think that is perhaps where some of the confusion lies in terms of the audit.
From the clock perspective, like you said, 2013, a great example of what you're speaking of now. The old police station right across the street, which was last year, it took us over 9 months to prove that the city of Hartford owned it. And that's going down to the county court, the county assessment office, and I made several trips. Just some of the older buildings that's outdated for getting the information, and you know, you go out and record these downtown in the slab, and down in the basement with the microfiche machine. Some pen numbers don't line up with physical address, and it took us a while. Now, the insurance allowed for the demolition and the removal thereof after the fact, after the contacts, but it took an extensive period of time and work to be able to make sure that the city of Hartford owned it and had the rights to it.
So if somebody gets hurt on one of those city-owned properties, so you say it makes very little difference. So let's go back to your, I know it won't quite be the $800,000 scenario, but somebody gets hurt on one of those properties and they file a claim. That's a part of our insurance, is that correct? Correct. So if they end up with, say for instance, $100,000 in medicals, we have to pay that, correct?
Correct, that's 250.
Well, I mean, we're not attorneys, but if we have a property that we made sure there was, let's say it's a city-owned abandoned property, it's not a listed property, it's a city-owned abandoned property, and if it was properly secured, if someone gets hurt in there, they probably are trespassing. So there's a lot of big instances that where that claim could be denied because they're on city-owned property and it shouldn't be, as long as we took the attempt to make sure that that property was secured. So it's not automatic that we have to declaim for someone that's hurt somebody's on the property illegal.
No, I just want us to be, just we start looking at that. But I'm leave it wrong there, just look at that.
Okay, which gave me another idea. I think we need to identify, our city-owned properties. We need to put something up there that states don't come on the property, something to that effect.
Absolutely.
Hey, there was something, Mr. Mayor, I was asking the chief, Bell, to do that, but that's a different subject, but to put, to have someone, like I think they called it rat patrol at one time.
No trespassing, something.
Yeah, around that, those type of things. But it's a little off, but it's a little close at home.
I'm for the,
More than should do the pattern, yes, sir.
we was talking about, I guess, residential property of city-owned abandoned. But as far as the coverage of the property, the city property buildings that's over 30 years old, which I'm assuming a lot of them are. I noticed that is, I was taking some notes yesterday, it says the coverage is for the actual cash value.
Right.
And should it be replacement cost?
So, no, if the roof is over 30 years old,
No, well, in my example, let me give an example of this in my head. Let's say one of the buildings burned down. And I don't know, if it cost $2 million or whatever to build years ago, the claim would be for the actual cash value, right?
if the only, there's only two properties that are gonna be actual cash value based, not replacement cost. And that is vacant dwellings, okay? And roofs, buildings with roofs over 30 years old, excuse me. So if you have a building that's got a roof that's over 30 years old, then the policy has an actual cash value conversion on it. If it's a 29-year-old roof in a 100-year-old building, it's replacement cost. Does that make sense?
The roof or the building? They talk about both.
If it's yeah,
I'm saying if you had to replace the building,
right, it's replacement cost.
I was just gonna use an example. I don't know if it's specific, but it's in terms of a car. You know, say for example, an older car is involved in an accident. And what it means to me, I thought the car was like worth 50,000 miles. It's only a blue mark, blue book, yeah, right. And you know, for like 5,000 something.
Right.
Yeah, but you're not paying $2 million in premiums, obviously.
Well, I mean, but again, it's civic.
Well, you're right. For vehicles, in most cases, they're depreciated down to actual cash value. In the city's case, that's only true if it's a vacant dwelling or if it's got a roof that's over 30 years old. And they do that because they want the city to maintain their buildings.
Mr. Taylor, I'd ask you to provide me a copy of the declaration pages from previous most current policies. But one of the things that I noticed is that there was no transfer of funds fraud coverage. Why is that?
There's no what? I'm sorry.
Transfer of funds fraud coverage. What covers that?
That's going to be, I believe, under the. Give me an example, just so I'm clear, because there's different verbiage.
If we transfer funds, you have. I'll just pull it for you versus. I don't think you have that. I'm getting more specific now. Under the Hanover policy, there's a section that says, so they can say that right. Ensuring agreements as employee theft per loss, employee theft per employee coverage, forgery, alteration, it has that. And we go all the way down to number 8 on that policy. And number 8 says funds transfer fraud. And I'm asking, why don't we have funds transfer fraud coverage? It says not covered.
Okay. Do we have an exposure?
I guess that would be.
I have to look at the. I'm sorry, Alderman. I have to look at the apps to see because we do ask every year for updated applications, and we gather data from the city. And if we didn't feel that there was exposure or risk there, we wouldn't offer the coverage. So I have to go back and look at the application and see if we think there's a risk.
So you cover vehicles because you know we have vehicles, right? And you cover property because you know we have property.
Correct.
We do transfer funds. And we're a municipality, and you say you have other municipalities, I'm sure they transfer funds too.
Yes.
So what I'm asking you is, this is not something that should have to just necessarily be a specific question. It's almost something that's part and parcel with the municipality. Just like we have cars, just like we have buildings, just like our employees. So why no transfer of funds fraud coverage?
I can't answer that off the top of my head. I have to look at the contract and look at the verbiage to make sure I understand what the need is.
Do you have, well, first of all, let me go back. Mr. Taylor, you said that you have been working for the city for 21 years, but you haven't been a broker for 21 years. How long have you been a broker again?
The company I'm with, FTBG, has been working for 21 years.
Okay, SBBG has been for 21 years.
Yes,
Okay, how long have you been with
1996.
Okay, all right. So you've been on the City of Harvey accounts since that time, or you came later to the City of Harvey? As the broker.
Yes, it's 1996, yes.
Okay, so you've been the broker of the city of Harvard since
With
1996.
USBG, yes.
Okay. And you came on when?
2008.
2008?
In 8, I believe, was the year we took over the property case.
Okay. Do you get broker agreements? Do you get separate broker agreements with the city?
I have a broker agreement with the city.
Yeah. I mean, how do you go about hiring?
For the discretion of the mayor to choose professional services.
Okay. And is there a contract for that?
No.
Okay. For the sake of this body and also for the audience, so that we can have a clear picture, because it seems to be some questions. Tell us, first of all, what you actually do. What do you do? Because I remember Alderman Drewinski just saying that she didn't understand what you did. So please explain what it is that you do.
You want to start?
Anyone.
What do we do for the city?
What do you do as a broker?
Well, we do a lot of things. As you pointed out earlier, we help with employee training. We offer risk management resources. We do marketing. We help with claims consultation. We sit with the TPA and go through claim reviews. I mean, we do a whole bunch of stuff for the city, including this piece, which is a full marketing effort, right? So, I mean, does that answer your question?
If that's all that you do, but if you do more, I want to know more.
Well, I think the proposal explains a lot of what we've done and the things that we've been able to do on programs that we implemented that we do throughout the year. In addition to doing the marketing every year and come every more time. I mean, that's typically what brokers do. We go out there, we market your plans for you, we come and give you options, give you the best case scenario. But in addition to that comes the risk management and the resources that we provide throughout the year.
But we don't, and you have to understand, I mean, it could seem silly, but, you know, I've been on here since May 11th, 2015. And outside of this particular period of time, I have seen neither one of you in this capacity. So I don't really know what you do.
I mean,
You know, and you don't come before the board often to report to us, to tell us what it is you're doing. So once again, that's how I need to know what you do.
And again, it's in the proposal that you did get, but what we do is we provide the marketing every year for renewal time. We do constant analyzing of the claims, how the program is running as a whole, and we do the risk management piece, which includes employee training. It includes looking at other ways to try to mitigate claims, and that's an ongoing thing. So it's not, you know, it may sound like one or two things, and it doesn't sound like a lot, but it is. It's an ongoing process.
I think you guys might want to point on the fact that you got a specialist in your particular area. And how you utilize your special talents with respect to insurance, go out to broker, to identify and assess the market. Right. You know, I think that your talent, your knowledge, your expertise is you need to kind of touch on.
Sure. Yeah, well, those are all things that I guess I'm not used to being asked that kind of question. But yeah, I mean, we basically we have so our here in Chicago we have about 400 employees, right, in our Chicago in our two suburban offices, and about 300 of them are in the property casualty arena, which is what this falls under. So that includes risk management and loss control services. It includes claim advocacies. I think Dave Spiel and people from our claim settlement sit in on the claim reviews with the TPA, with a representative from the city. So we're constantly involved in claim comes in, right? We, as Cliff pointed out, And as I said earlier, we represent about 40 public entities, municipalities in the Chicago area.
Is that Hub or is it SBVG or is that, who is that who represents all of these municipalities?
Hub does.
Okay.
Hub does.
How many does SBVG represent?
I do have municipalities that I represent approximately 4.
Approximately how many? 4? Okay. And you provide both you and you provide the names and references for those?
Sure. Yeah.
All right.
Is there a special certification or license that you guys have to have to make you special?
We're licensed in property and casualty. There's no special license for public sector clients. I would say it's more of a appetite, and we have account managers that work for us. That's all they've done their entire life is service and manage public energy risks in the Chicago area. So we've got a pretty deep bench of staff, and So what we do kind of encompasses anything that touches insurance. Whenever there's a claim, we touch all of that.
Would it be safe to say that you guys go out in the market and shop?
Yes, we do that, and we've got contracts with all of the carriers that specialize, and all the underwriters that specialize in public entities.
So does Hub handle all of our lines, or does Hub handle part of our lines?
Just the property and casualty.
Okay.
And then that's where
With-
you come in and you handle all the other stuff. That is why I was wondering why we have 2 different companies. That's,
And again, like I said,
and that's normal. All municipalities have 2 different brokers, or is there one broker?
depends on the
Depends on
municipality. Depends on the municipality.
What about certifications and things of that nature? He was asking about licenses, but what about certifications?
Well, the only really certification in our industry is a underwriter, CPCU, which I am not. I'm not an underwriter. That's the commercial line. I forget what it even represents, but it's for somebody that actually does underwriting or actuarial work, and I do not do either one of those.
What about you, Mr.?
I don't have any special certification yet besides 20 years of experience in the insurance market.
What about ARM certifications? You got those?
Excuse me?
ARM certification?
I'm not sure I understand what that is.
Oh, I'll tell you in a minute.
So basically, you deal with workman's comp
Everything that's in this book.
and this.
Right. And,
Associated
Do you
risk
have a
management.
list of what you deal with?
well, I am not, but Dave Spiel, who's on our team, is I'm sure he's got a bunch of certifications. I guarantee he's got that certification.
And what about you, Mr.?
No,
Yeah.
We bring the people that have those resources, including Dave Spiel, Todd McCumber, who are both on the team that help services. They both are. There's national speakers. They're not. They're not just some guys who picked up off the street. So.
Yeah.
But they,
Layman's terms. Brokers get a fee. There's no doubt about that. Now, with the broker's fee, there's one fee and you 2 split that fee.
so to your eyes, there's no difference on that.
Whether it's one broker or 2 brokers, there is just one fee amount.
Yeah, Click chooses to pull us in for our resources.
Is there an intermediary between you and the underwriter? Mr. Taylor?
when you say media.
Yeah, is there someone else, or are you directly dealing,
Directly with our team. We have a team. That's what's simple. And that
But you
team,
just said that you cover one part of the insurance,
Right.
and you cover the other part of the insurance. So if you're broke for one part of the insurance and you're broke for the other, then what I'm asking is there an intermediary? I was asking you first between you and the people that you deal with, and then is there an intermediary between Mr. Morpos and the people that he deals with?
no, I deal directly with them.
So on the property casualty, Cliff has chosen to partner with me and so that we can bring the resources. To you, it shouldn't have any impact, okay? intermediaries, are we dealing directly with the underwriters? In most cases, yes. In not every case, because in certain cases, underwriting companies like Lloyd's they select a managing general underwriter. Basically, they outsource the underwriting. It's cheaper to outsource it to a third party than to house their underwriter. So, in most cases, and I couldn't rattle off exactly every one but in most cases, we'll deal directly with the carrier. In some cases, we deal with and what they call a managing general underwriter, which is an outsourced underwriting unit assigned by the company. And for Brit, there certainly is one, because Brit is a Lloyd's company, so it's a Lloyd's syndicate that's put together. So there is an intermediary.
But it seems like brokers take out the middleman. But I know from my perspective, it gives me the opportunity to put me at ease with respect to the city being able to be covered. Right. So, I mean, I think that's one of the key aspects of having brokers. But more importantly, protecting, personal data. I mean, I think that's the key role that the brokers have to, protecting personal data. That's key.
So outside of this, what other insurance do we have?
I mean, talking about the health one.
No, this is one aspect, this is HUD's insurance.
That's the entire piece.
And then what?
GL and workers' comp.
Okay, and then what is the other insurance that you assist with the city for, that you're a broker for?
The health insurance, the health benefits.
Okay. And we don't go out to bid for that?
Well, we do our bidding process when we go out to all the carriers, yes.
Okay, and then that comes to the city council?
I don't really know that.
That is, because I have never seen that, that's why I didn't understand the two roles. Okay.
Anyway, go ahead.
Now, with respect to your expertise and your talent, you go out to the market to choose what's best for the city's interests. And I think that's a key component of what you guys do.
And if I can add there, that's one of the reasons where when I bought in HUD, because we've done business before, and I bought them in because of their size, because of their resources, because of their leverage and their expertise. When we took over the workers' comp and general liability, I could have easily, did that on my own, but I don't have the resources and leverage that he has in those lines of market. So I wanted to make sure that the city had all the resources that they had available to you. Like I said, we another meeting, I wanted to make sure that if we got representation like a Schaumburg will get, like a Naperville will get, we deserve that type of professionalism. A lot of times in minority cities, that gets ignored. And we saw that firsthand, and that's why I wanted to rely on the resources of HUD because of their size and expertise to make sure that we were afforded the same type of respect and professionalism.
Okay, one more question. The insurance company pays the broker's amount. What is that? What is that percentage? So we're paying what?
It varies by company. I mean,
Well, through this package, to broker this package, an estimate, what would it cost?
Yeah.
What is it costing the city?
well, it's not cost the city anything, because underwriters,
It's costing something.
Yeah, it
Your
is put it in the cost.
underwriters are gonna build, they build into their, actuarial rates, commission, whether you go Blue Cross the same way. If you go direct to Blue Cross, their rates are, irrelevant whether you have broker representation or not. So I believe off the top of my head, it's roughly 10%
10%
of the premium,
of the premium.
roughly, of us.
And then you two split the 10%.
That's how our agreement with our company.
Well, yeah,
They'll give more than
No, it's not, because it's what we got, it's what we deal with. It's professional services. And as professional services, we need to know how much we're paying our professional services. And just to say, well, it's a percentage of what could be something, down the line. No, we want to know how much you get and how much you're making, because the simple fact is we have a right to know, and the people have a right to know. All this money, but we pay. We as citizens pay it, so we just want to know.
I have a question. I know the,
Well, hold on.
I'm sorry, I thought you pointed.
Okay, we're gonna once the alderman
That's fine.
finish their line of questioning, then we certainly open it up. Certainly, when we get into an actual crunching the numbers, asking numbers questions, certainly you might want to try to do it maybe in an executive session, or maybe if there's questions concerning the senator, email that particular, even though eventually, it can come out.
Right, well, and see, we're here, the people should know, because that's the reason why they showed up, is because the people that are in the audience want to know what's going on. They want details, they want transparency. So to say, well, let's email it to us later, you can tell the people now what it is that they pay for this type of service to have.
I can't tell you because I don't know the numbers memorized.
But you did make some money last year, right?
Yes.
Okay, how much did you make last year off of what we spent?
I had no idea.
You have no idea how much you made?
No. How much I made personally?
How much HUB made off of it? How much SBBG made off of it? How much any of the company made off of the deal that was stricken with the city of Harvey, was struck with the city of Harvey and the renewal last year? Because you got paid for that. You haven't got paid for this one yet, but you got paid for that. And I'm sure you were looking for a check, because I know whenever I get paid, I'm always looking for that check. You were looking for a check. How much was the check?
I don't know.
Okay. Thank you.
Are you familiar with the National Council on Compensation Insurance Company?
Yes.
You guys use any of the research that?
Well, yes.
The reason I was asking because I know even the mayor mentioned earlier about how what goes on nationally affects our premiums. And of course, since you're familiar with them, they're the official rating and statistical organization concerning
Correct.
the workers' comp for more than 30 states.
Correct.
And in their annual report, they reported that things were pretty calm now. And I know earlier you said that because of what's going on nationally, it's causing, I guess, the premiums to go up. But they're reporting that things are pretty calm now.
In this sector,
Yeah, in workers' compensation.
in this public entity sector?
Yeah.
Okay.
Well, AIG said we were doing a great job too, didn't they? But our premiums go up when we're doing a great job.
So the workers' comp, NCCI is the National Council on Compensation Insurance, and they are the regulatory body, as you said. And they set guidelines as to what they believe they set state rates. They set rates based on by class code, okay? But not every company uses the NCCI. And I believe Safety National does, but don't hold me to that. So those rates are set by NCCI, but then individual claim experience and other factors are included that can sometimes skew that. But I would argue that I think my statement from the first onset was correct, that in general, work comp claims in public sector in general have increased, the risk has increased, and I think I could be happy to provide you with data to support that.
And if I can add with the NCCI rating, they're part of the reason, like you said, they do the rating, and that's where they want to rate Illinois as the 7th highest in the U.S. in terms of workers' comp rates. So while things may be climbing overall, as a country, to a degree, they're still high-risk occupations. So when you carve out municipalities and states and things of that nature, that's when you get more specific, because you have your police personnel, you have your fire personnel, you have those different high-risk occupations.
And just for the record, because I didn't ask you the question directly, Mr. Taylor, how much do you recall how much you made last year off of this?
That's something that I would like to discuss in the executive session.
Okay.
That becomes an issue.
Okay. Well, it is an issue, so I think we should go into executive session if that's the case. But we don't have executive, we don't have executive
We
session.
can't, not in this.
I can't see the agenda. Oh, okay. Okay. Okay,
That said,
when was the, I do have a question, when you get this position as a broker, and I guess you said 1996, it was through professional services. We have not, did you have to do a proposal for this, particular position? What happened at that particular time? Where the council, voted on and approved for you to be, the broker at the time, because HUD wasn't there, I'm assuming. So what happened at that particular time?
Well, they were already the broker before I came
Who was that?
with SBG.
SBBG?
Yes.
Okay, well, already. So you would have an answer to that question. Okay. All right. Then, Mr. Mayor, if I may ask you a question. How did that occur?
with respect to the brokers,
Yes.
and the date that you, what date did you just?
Oh, you said 1996.
Well, that date
Okay.
predates my.
That predates you as well. Okay, well then if that's the case, then
Is there any records though?
I don't know.
Is there any records? We can definitely, see what we can, find with respect to that particular company.
So we have not looked for any other proposals since that time.
In terms of,
As far as our broker record.
I believe they've been broker records since, the date that you've indicated.
So SBBG is the broker, or Hub is the broker, or Insure Source is the broker, or I'm trying to figure out who's the broker now. Because it seems like these names get thrown and tossed around. So who is the broker of record for the city of Hartford?
For the general liability and workers' comp, Hub is the broker. We're co-broker.
Both brokers on the property, supposedly having problems. Hub and SPBG.
For, and what was that for?
Proposal that you're in front of us, property engagement in the workers' comp.
And you're currently, both companies are currently brokers, right? Oh, right.
Correct.
Okay.
Any other questions from the audience?
No.
If not, I'll open it up to, the Winston. Yes, yes.
I just have a question. Is it possible that we could lower our deductibles from 800,000 to maybe like 600 or 500,000? Or, said, 800,000?
We were unable to get that deductible lower.
You could not lower.
We were unable to get it lower.
We've had that option in the past, but of course, doing that is going to cost more in premium.
Oh, yeah, it's always, we do lower, yes. But sometimes only like a couple 100,000 more, all depends, If you're paying 2 point something now, what's a couple 100,000 more, you could lower it. But you just say you can't lower it.
We could not this year. In the past, we have shown some alternatives, but we could not this year.
So in the future, we probably could resign this year. I did have one question that was piggybacking off looking at the insurance for transfers and fraud money. Is that something that we can look at?
Yeah, I'll find out. I mean, that is a statement that company does, so I'll look at it.
Protect someone.
You have everyone's email address, correct? Because there was some information that you were gonna forward to us.
Yeah, I'll get
And the other question I would like for a more closer relationship with you. Instead of, just like once a year, maybe twice a year, update so we can see where we're trying to go, what the issues are. Not so much, give a lot of, this is a very good meeting, but I wanted to get more, mid-year, we're doing, and that, and then dealing with properties.
Yes.
Our properties, cause right, Mayor's,
We have a question from the audience.
right, Mayor's
Don,
question
Don,
concerning our properties in Florida.
Maybe I'm still being late, but I just wanted to know what was the complete amount of coverage that the city is requesting through your proposal? The complete amount, did you say something like 20 million? What was the amount of coverage?
The total umbrella.
Yes, the total,
It's, I believe it's 20,500,000.
20 million.
It depends on, in general, yeah, it depends on coverage, but for the most part, 20 million.
Thank you.
With that said, any other questions? I ask for a motion to adjourn.
Mayor, I'd like to do one thing. Because this is a committee meeting and we're going to eventually have to go and I do this reluctantly. But I'm assuming that this is going to be on the agenda in our upcoming meeting.
Yes, sir.
I don't know what date that is.
22nd.
22nd. 27th.
So what I want to do, Mr. Mayor, is I want to do several things. I want to make something that we can possibly recommend to the entire council for a vote. But I am not satisfied with what I see today. Now, there's some pluses and there's some minuses, and I'm not saying that everything is bad, but I'm saying that I believe that we can do better. And based on that, I believe that we need to make a move to start looking for a broker, a record. And it may end up being the same, but the simple fact is we need to explore those options and do our diligence as a council and explore that, because if SVBG has been the broker of record since 1996, there's been no exploration since that particular point in time, then I think that we need to put out a request for proposals as far as a new broker services. The insurance, I mean, the insurance looks like it is what it is, but I think that some of the questions and some of the answers that were given here were not complete. I think some of them were disingenuous, and for that particular reason, I don't have the faith that we're being represented properly. And I say that, like I said, reluctantly, because I came into this meeting with the mindset that I wanted to try to have as open a view as I possibly could to try to give our current brokers that opportunity. And I think that through almost an hour, 2 hours of almost questioning, which I will say, you guys, thank you for that. 2 hours of questioning, I was still unsatisfied. So what I would like to do is, I think that we should RFP this out. I think that we should have Hub and SVBG come to the table along with some other brokers and see what those other brokers have to offer. And then at that particular point in time, make a decision on who our broker of record should be. We should, notify the underwriters of the same. And that's really what I think that should be happening at this particular point in time.
Well, again, my interpretation of the meeting tonight was based on the agenda with respect to making.
But this is a recommendation.
Yes, sir. Yes, sir. And I certainly, with all due respect, respect your recommendations. But again, I would just like to add for the record that I'm totally pleased with the skill base, the skill set, the knowledge, the professional protocol procedures, the assessment plans, and just the overall talent with respect to being an insurance specialist and what they have offered, since 2006, particularly. They've done a tremendous job in the area of insurance, and I think that to do anything other than that would be certainly a disservice to these two outstanding young men who have provided some very invaluable expertise with respect to assisting the city in finding the best shall we say, deal with respect to insurance. And we certainly would, and again, I thought that the line of questioning, were certainly well put. And I thought that their answers, again, this is my assessment was, professionally, exchanged with respect to the question that was asked and the answer that was given. Oftentimes we cannot, if we look at that particular chair, it has certain dimensions to it. If all of us look at that chair, we certainly find something that we could find wrong with that chair. And so I think that to come at the last hour and not adequately assess the gentleman's total body of work, certainly, we certainly would really be doing the city a disservice. So at this point, I'm going to, I certainly do respect your recommendations.
Well, it's a recommendation, Mr. Mayor, that I'd like to form in the motion, because this body here is a recommending committee, as a committee as a whole, for the entire council to take a vote on Monday. And as this is going to be on the agenda on Monday, we need to do so. Now, I mean, bottom line is, this is something that should be considered. And we should RFP this out. And if bottom line is, if we end up in a situation where we're not doing that, then we're going to end up fighting against each other again, and everybody's going to be, talking about so-and-so did this and so-and-so said that. All we're trying to do is open up the process so we can make sure that we're getting the best deal and the best broker representation that we're supposed to have. And I think having the same broker since 1996, 20 years.
And it might still be there.
And it may still be there.
And let me just say that if in fact that was a concern with respect to the agenda, certainly that should have been on the agenda, and we certainly could have.
Well, that's the purpose of the committee meeting.
Well, again, and the committee meeting, we deal with items on the agenda.
That's the purpose of the committee meeting, to give a recommendation. So you're saying the purpose of the committee meeting is not to give a recommendation?
I'm saying that the purpose of tonight's meeting was basically to deal with the items on the agenda. Now we're going into, RFP. We deviated from what's on the agenda.
But I want to, for the record, one is that I'm making the motion to do several things. First, because I didn't even have to do this. I'm handing out to the council members and to you, Mr. Mayor, a tentative, and to the clerk, a tentative, and to our esteemed council, a tentative request for proposals for broker services of record for the city of Harlem. What I am hoping that everyone will do in between now and our next city council meeting is that they will review this. They don't have to agree right now, but I'm hoping that they will review it. And upon their review, we come back to the city council on Monday on the agenda with this particular item.